Monday, January 9th, 2017, Monaco 64, home of alternative economics and contrarian views. So early market update this Monday. It's just gone past 8 a.m. London time or 3 a.m. Eastern Standard Time. And most noticeable development this morning is the weakness in the British pound. I haven't read the news yet, but probably related to Brexit as usual these days. British pound is down almost 1%. It's down 0.84% or down 102 pips at 121.80. And we broke through 122, which is a key support in the last couple of weeks. What else? The Chinese yuan is back down a bit. You know, it strengthened quite a bit last week. The dollar dropped below 680, but now it's at 680. Let's see, 687. So the dollar's up 1/3% against the yuan this morning. Dollar's also up against the yen 1/3%, up 36 pips at 117.32. Euro's fairly steady, basically unchanged at 105.35. So despite the fairly strong dollar here, gold is doing fairly well. It's up $2 at 1174.50. Silver is down 3 cents, 1645. The Dow again is up. The high so far has been 19,998.7. That's in the futures, of course. So we failed again to touch that 20,000 level. Pretty frustrating for the stock bulls at the moment, even though it's just a round number, but everyone's like looking at this Dow 20,000. What else? Bitcoin still fairly volatile. Yesterday we got back above 900. This morning we're back below 900. We're at 885. That's on CoinDesk. So not much change there on Bitcoin. I do expect the volatility and the up and down motion around that 900 level. Bond markets are very steady this morning. Yeah, it seems like the yields have stabilized and not really moving much. We're at 2.42%, the 10-year yield. So about 20 basis points from the recent high around 264. What else? Yeah, British pound price of gold, that's doing fairly well this morning, 965 almost, considering we got down to around 904 in the early part of December. We've recovered quite well. Of course, we're still about 100 pounds below the recent highs, around 1060. But doing fairly well, British pound and gold. Silver also, 1353. We got below 13 in December as well. The other thing I want to talk about is a bit more about the price that we've paid as society, and especially the younger generation. And a lot of them don't know about this. The price they've paid for the bailout of the financial system in 2008-09, after that big crisis. And a lot of the reason why they don't know about it is because it's been almost 10 years. You know, the people in their 20s, they were only kids back then, and they're not taught in school exactly what happened. Or, you know, I look at the demographics of the people who watch my videos. It's more the people from 35 to 55. Hopefully, you know, younger people will start waking up to the fact that the reason why, you know, getting on a property ladder, as they say it here in the UK, to buy a house or to rent is so expensive, is that to save the financial system and the big banks, they had to prop up the mortgage market, because that was the biggest, you know, part of UK financial institutions' asset side of the balance sheet. So they couldn't allow housing to collapse. They had to prop it back up, in debt the whole country, double the national debt, keep running deficits. And that's what they've done. I mean, a few weeks ago, I played golf with a young guy at my golf club in his 20s, and he said, my father said that he used to earn the same thing I earn now, but the house he bought cost £70,000. The house I want to buy now, which is similar house, is over £300,000. So that's what's happened. When the bailout happened in '08, and they voted for TARP, I was telling people and writing as well that I was still in the city. I was telling people there's going to be, there will be consequences. This is not, you can't expect to have a free lunch. Some people are going to suffer. Well, in relative terms, of course. But the people who've benefited are the people who made the mistakes, who bet, big time, leveraged, used derivatives. The so-called financial professionals in the city and Wall Street, they've benefited because they've said, wow, we don't care what happens. We just want to make the money. They're not going to let us fail. And the other thing about the UK, the people who own property already, who are the older people, a bit like me and even older people, they've benefited because they've got, an asset that's worth quite a bit. I've benefited from it, and it seems weird that I want to talk about it, but I think it's more than fair to expose what's really happening. The explanation you hear in the mainstream media here in the UK is that we don't have enough houses and there's too many people coming into the country, and that's why prices have gone up and rents have gone up. But they're totally wrong. A lot of people who have savings and cash, the older people, in the past they used to put it in the bank or buy, gilts and get 4, 5, 6% a year on their money. But now you get zero in the bank. So what you're going to do, you're going to buy another property and rent it out. And that's what's happened. So just wanted to clarify that. Also, all the inequality, the reason why, the people at the top in finance and in the big corporations, they're benefiting because they've got the free money. And they can speculate, they can buy back the stock in their companies and get big bonuses. But, the people in the middle, they're not benefiting, nor the people at the bottom. They're still earning minimum wage, which is, people, or like this young guy I played golf with, they're still earning what people used to earn 25, 30 years ago as a starter salary. So, that's what I wanted to clarify. There is a payback, and now they keep going on about, the UK economy is doing well, Brexit didn't hurt us, GDP is still firm, but they don't talk about the fact that we're still running 5 to 6% budget deficits. If it wasn't for those deficits, which keep adding debt to the national debt, if it wasn't for that, our economy would be, negative GDP. So yeah, the economy hasn't collapsed, but we're still raking in the debt more and more. And of course, it's impossible to say, on March 20th, 2017, the economy is going to collapse. I don't know what's going to trigger it, but it can't go on forever. The economy is not different from you and I, individuals. If we do what the government does as a whole to the economy and their finances, we'd be in trouble soon. And there will be a time when we'll have to pay the piper here in the UK and the US. So if you enjoyed this video, please give me a thumbs up, share it far and wide, and subscribe to my channel if you haven't yet. And if you'd like to donate, there's some links below in the description. I'll talk to you later. Take care. Bye.